And good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Monday, November 14th, 2022. Kind of not a real wild day, but a kind of a slow day, but a mixed bag of everything. But the market continues to do pretty much what I felt was in line to finish up this wave. Now, I'm sure many of you are now looking at this chart going like, well, why isn't he putting a 5 up there? Why aren't we putting that minor C wave and that intermediate wave 2 up there? It's because we've seen this show before. And I have to leave it open in case I need to revert these with the 3 over there. And then we're going into a 4. And then we'll get that 5, and the 5 might be the blast off tomorrow, and they decide they love the PPI final. So we still got a lot of inner workings to kind of deal with, but I'm going to leave it like this. I am going to leave the 3 there, the 4 there, and give this opportunity for this market to decide for me on what comes next, because the slip lower pretty much in the last hour and a half, let's say, of trade was pretty much steady and down, and the Dow was up over 100, I think, or somewhere in there, ends up closing down 211. But even in the process from that bell ringing, which was 17 minutes ago, till now, they're pushing the Dow back up. Well, it was up about 50 or 60, now it's only up 40. Or close to 50. So, they're already moving back in and pushing it back in the other direction. And that could have been some earnings that came out that are within the Dow. I'm not sure. But I see what they do. They pound it and then they step back in. And so we're going to get a lot of position squaring in advance of tomorrow's pre-market PPI final demand data. So I really urge caution on this one, because if this is over, then what's ever going to come out in that PPI is going to send the market into a tailspin. If indeed intermediate wave 2 is complete, and what we got coming next is an intermediate third wave, that would be going down, then that number is not going to be a good number. And that number would be interpreted as severe. And it would throw this market into a tailspin. In fact, we'd likely get the opposite of what we saw last Thursday, where it was like, okay, not a great number, but hey, a small improvement shoves the market up 1,000 points via the Dow, 800 via the NASDAQ, 150 plus via the S&P. And then they built on it. And then they kept going with it. So we still have all of that left over, because basically it's not even been a week of, Fed's going to pivot, inflation's under control. Now we got people like Kathy Woods, we got other people coming out and saying inflation's over, inflation's done. Now, I don't know if that's just because she wants to beef up her funds and get some money back in there and start making money back, or what. But when I start hearing that, I'm like, boy, you're premature, and et cetera, et cetera. And because I don't see that proof necessarily. So what I do see is that we still continue to fight inflation. And however they collect this data, however they compile it, however they put it together, it seems to me that, or the way I feel, is like they're not going to the same grocery stores that I do. That every time I step in that grocery store and think I'm going to get out, just picking up a few things, and I'll get out for less than $50, it's always closer to 100. Because everything has ticked up another 50 cents or even another $1. It just depends on what area of the store that you go in. Now, yes, gasoline prices are starting to come down, but then they go back up. So it's very misinformative, if you can say, in terms of what really are we confronting. Now, we can continue to have a myriad of additional problems worldwide that could shove our market straight down into the doldrums of a bottom. So I need to leave this as follows. That I'm leaving it a 3. I put in the 4. I'm leaving space for a little bit of a bigger 5. And the reason being is this is where my resistance is 4-way 5. Because remember what I said, that once I got 3 and then that 4, which I believe we did today, right there at the 10 o'clock hour at the bottom of the low within that hour. So I put the 4, and then I was able to put up extensions for wave 5. Now that was pretty much after, they got up there and then they failed and they started to come back down. So they didn't even get to a minimum, not that they should, because this 5 has to be compared to this 3. And the 3 was gigantic. The 3 was a true third wave. So what we're dealing with is, will the market gain enough steam, or could it have gained enough steam to get up to 11,955-ish or so, or maybe even 12,000? And the answer right now would be no. But I don't know what that number is going to be. I don't know what lies behind the curtain. I don't know what the reaction may be one way or the other. So I'm not putting anything up there to say that this is done and now we'll just plan for downside. Now, the one thing I need to add again right here, there are a lot of people that were checking in with me today and they were asking, could wave 4 be done? I said, yes. Is wave 5 done? Possibly. And I'm going to leave it just there. But if you're trading on that, it's your call versus mine. And I would hope that you're putting in a protective stop. Because if we get another shoot up like we did last Thursday, because that's just what they want to do, although I can't imagine that they're going to try and do a short squeeze after all of this, because I can't imagine how many people are now going to be short. But nonetheless, we got a lot going on. So I'm leaving upside open. I don't know. Right now, if I had to put a 5, a C, and a 2 here, then it spells kaboom. Now, I'm on the hourly chart. Kaboom would mean we fly through these. We fly through these. And we break back below 11,000 in a heartbeat. And that's 700 points from where we are. 760 points from where we are. But they did this in a minute. And that was 508 points. They could do that in that same minute. That's kind of my point. We need to just realize that this volatility may pop its head back in tomorrow, and it'll do it on that number. So be very careful if you're going to be engaged in trading the number. It could be wild, it could be woolly, and it could destroy your account or add magnanimously to your account. So here we go. Downside, there's just a ton and a half of room to fall. I'm going to go out to this daily chart. Again, if I got to put the 5 there, boy, that little itty bitty 4 and an itty bitty smaller 5 just really don't necessarily fit. That's why I'm having trouble with it. So if I have to come back down and readjust that this 3 was here and we're in the 4, then we're likely going to see that and then a blast higher. Now, can we blast higher and still be in an intermediate 2? Absolutely. Absolutely. We have this inside as our intermediate 2 resistance. We haven't gotten to 618. We haven't gotten to 50%. 50% is 12,109. The 50% for an intermediate wave 2. 618 is 12,500. 70.5, which considered sweet spot, also right where the EMA and SMA, the 200 period on the daily, sit at 12,750-ish, right in there. And we have that other resistance right above it. Could the market get there? Sure. It absolutely can. And guess what? That's 1,000 points. From where we are, it's 1,000 points. Could it do it? Yeah, it did it the other day, last week. Why would I think I can't do it? By Friday's expiration, This thing was up an additional 200 plus, and after it closed up 700 on Thursday. That's 1,000 points. Could it get up there? Why? Why would we think it can't? So yes, that all exists. So I'm leaving this open. That's your upside risk right now, that they explode, and they do fulfill the max on getting this thing up to these resistance areas, which correspond with an intermediate wave 2. And that's what we're in. We've got the A, the B, A of intermediate 2, B of intermediate 2. We're in the C wave. And right now we've got it 1, 2, 3. That 3 could be over here. We get a 4 and then a 5. So that we got to leave alone. That we got to prepare for. And that we've got to leave space in your trading mind that that's what it could do. If that number is rejected, if the data comes out and the market rejects it and drops, it's going to go just as fast as it would on the upside, by the way, because everyone's going to be piling out. Everyone's going to be trying to, make their adjustments before the market opens an hour later. So I would expect, and I'm going to sit right here on the daily. We got the daily 4, we got the daily 50s right here. So here's the gig. I think either we drop down through the 50s if they reject it, and then down through the 8 and the 20 on the daily. If they reject it, start heading for 11,250 or lower. So it's a quick 5 down, 500 points down, I meant to say. But breaking these 50s, right? So what do we got? We've got this range where that could be support, and then that's going to be resistance. So down, then up, possibly. We have to wait and see. It's going to be a difficult wait. So, and again, as I've said over and over, I am a day trader. So I'm going to trade it no matter what. And I'm not jumping in because I already have a position. So it makes it a lot easier for me to leave it right here and get a good night's sleep. Sorry to say it that way. But here we have the upside. That's the potential. If they love it, we certainly can get up to these levels for the intermediate wave 2. But this is for the 5th wave. And the 5th wave would just be 100 equal to wave 3 up here at that same level. Can it do it? Sure. But I'm going to have to move that to that, and that's going to put this a little bit, these numbers would change. So, and in fact, I probably should take them down, but I'm going to leave them up for right now. And we'll go with that. Now, over in the S&P, and I'm sorry that it's just a little bit vague right now, but I hope you'll understand why I need to leave it a little bit vague. Now, the S&P, believe it or not, is a little bit clearer. It did go up and it did reach 618, but that would have been for the intermediate wave 2. And so they got above it. So it made a new high, came down, went back up. I can, if I bring it down a little bit more and open that up, 1, 2, 3. But I can do, it's putting in a little tiny 4 and a little tiny 5. And I'm telling you, within this whole move, those just don't fit. But if the market comes in tomorrow and does a slam dunk, well, they're going to have to fit. So that's my point. Right now, I don't want to put them there to satisfy a wave count preparing for a massive drop when I don't know if that massive drop will come in right now. This initial drop off of the day kind of gives me a little bit going like, well, it just might. It just might. So lots going to depend. But here in the S&P, where we came down almost, and that's the 15-minute. Let me go back. Let's work it off this daily, okay? Because that's the one that's really going to, if they come down. Right now, what's left and holding it are the daily 200 SMA and EMA. And they are sitting upwards of between 4,064 and 4,083. Now that 83, hey, for wave 2, there you have 70.5, sweet spot. It makes sense. Get up there, die, boom. But still leaving room for it to get up there, even with this. So again, it makes me want to put the 3 up here, and this is a 4. Now, if we come in, we get those numbers tomorrow, and it just drops below the 8, drops below the 4, then the 8 starts heading for the 50s and the 20, which are kind of grouped together right around 38.30. It would only need to drop 130 points. It can do that. We watched it do it last Thursday and then reverse and just cream everybody. So this all can happen and then still run this thing up. Again, it's going to be weird, but this is how we're going to have to get along with all of this. The market has been teetering, has been futzing, has been trying to determine where it wants to sit. So we had a lot of position squaring coming into the bell today. And now we got to wait for tomorrow. So I'm giving you both sides of this picture. Hopefully, if you have a trade on and you're running it overnight, you have place to stop in the market to protect yourself from these crazy moves that I almost will think are guaranteed one way or the other. Either we're going to get another crazy move up, or we're going to get a slam move down. So one way or the other, I do think we will have a pretty strong reaction to this PPI final demand. If it comes in nothing, I will be a little bit disappointed, but I would think that nothing would suggest that we go up. A muted response, as we've seen in the past with PPI, has produced a rally versus a decline. So it has to come in worse than expected. And if that occurs, then we go down. If it comes in as expected to slightly better, we go up. Slightly better, we go up a lot. Okay, now I'm going to leave it all there because I don't want to carry on like I did. I mean, last night's update was a little bit long, but there was a lot of information in that. So if I need to update that in terms of what that alternate count is, we know where we stand. The alternate count stays in force unless the market breaks above 41, well, actually above 41.36 to 41.73. All right, I'm going to leave it right there. We're going to keep this on the short side. And our next update will be on Tuesday, the 15th.